Good afternoon and welcome to all the participants. My name is Eugene Groenewald and I'm a director at VanderMerwe and Robertson Attorneys. I have the privilege of hosting our True Normal session today. Please feel free to use the Q&A button and to submit any questions during the session. We will look at the questions and try to answer most of them. We're also recording this session and we'll distribute it to all the participants tomorrow. The name of our weekly sessions, True Normal, refers to a new normal in our society post-COVID, to which all our families and businesses will have to adjust. The question is, what will the new true normal be? We have the privilege of having Professor Andreas Diacon, a professor of medicine and principal specialist in pulmonology at Stellenbosch University and Tygerberg Academic Hospital, Cape Town, South Africa. He received his MD from the University of Zurich, Switzerland in 1987, specialized in internal medicine and pulmonology, and earned a PhD from Stellenbosch University in 2007. He developed an early interest in TB during training in a former TB sanatorium in Davos, Switzerland. After migrating to South Africa, he started his own anti-TB drug research. He is the founder and the CEO of TASK, an organization specializing in clinical studies with novel TB treatments, vaccines, and diagnostics. Many novel compounds have been treated, or have rather been tested at TASK research sites. He is engaged in various research collaborations within South Africa and also in the USA and Europe. Recently, Professor Diacon was named as one of Bill Gates' heroes in the field through his contributions and continuing research for better treatment solutions for TB. Prof, thank you for joining us this afternoon and welcome to our forum. And then we also have Theo Vorster, Director of Galileo Capital, on the session as always. Theo needs no introduction and he will facilitate the discussion this afternoon with Professor Diacon. Theo, thank you again for joining us. You have the floor.
Thank you, Eugene. Yes, it's just think about it. It's the 10th time we've had this session. And it is an uncomfortable environment, and we're trying our best not only to provide concise, quality content, but also to give a view on how we see this play out and perhaps a bit of advice in terms of what one should do and what one shouldn't do on the investment side. So after we've listened to Professor Diacon, I will give a few updates just on background on where the Rand is, how's the Rand trading, what's happening in the bond market, and one or two indications as to where things can go. And then my colleague Warren Ingram will join us, and Warren will specifically give us an idea of his view of what one should look out for, how one should position yourselves, and what one should do in this very uncomfortable environment. But I would like to start with our guest today, Professor Diacon. And my starting point is most of us, we're in the business world, we're in various commercial activities, and we're slightly removed from what's really happening specifically on the medical side. And my point of departure is this is a biological challenge, and it will have to be solved by the medical fraternity. Medical science, in the end, will have to solve this biological issue. The bankers, the businessmen, the politicians can do what they want. In the end, this is a medical issue. So, Professor, thank you very much, and I'd like to get your thoughts on COVID-19 and how you see it, and your prognosis of where we are and where we're on the way to.
Thank you. So, assuming that you haven't heard me, I thank you all for having me here. And I would just like to express that for us as infectious diseases specialists, things are no different. You know, you from the offices you are in, you think the medical fraternity should solve it, but then I am a pulmonologist, and I think the infectious diseases guys should solve it, and the infectious diseases guys probably think it should be. And I can't, I'm not muted. Hello?
Yes, we can hear you.
Can you hear me? I was just told I was muted, but I wasn't. So even within the medical fraternity, you know, there is no one who has ever really managed a crisis like this before. So we are all in a new role, and the new normal, it applies to all of us, even within the medical fraternity. So in my spare time, as I can call it nowadays, I work at the intensive care unit at Tygerberg, where a lot of changes have taken place, and we have adjusted as much as we can to this crisis, and we can see all these patients coming, and we are, as you can probably read in the newspapers, that we are, at capacity, and are increasing this capacity as much as we can. And the short or the bottleneck is quite obviously qualified personnel. That is relatively difficult to create in such a short time, but we're doing the best we can. But coming back to my field, you can see on that slide, usually I talk about novel anti-tuberculosis agents and vaccines, and I'm just as much thrown out of my comfort zone as everybody else, so because now I have to talk about COVID-19. And, I'm not really an expert on it. Most of the experts nowadays you find on Facebook and WhatsApp, and Instagram. So I'm just the person that has been involved with another epidemic, with the TB epidemic in the last 15 years. There are some parallels. If you think about it, and I think I have a slide about TB, can move it, yeah. So an X-ray on the right, typically that's what tuberculosis looks like, so lung disease, and it's causing some kind of pneumonia, that white stuff you see on your left at the top of this picture. And it's actually been out there for thousands and thousands of years, and I think tuberculosis has been so successful because it kills people very slowly. It will kill somebody perhaps in 3 years, whereas COVID, if it kills a person, it will kill them in 3 weeks. And so TB is still around. And if you look at the numbers on the left, so we have 10 million cases in the world, and 1.5 million people die from it every year. Simple tuberculosis, and HIV helps this along a little, but most of it is still not HIV driven. We have a big problem with increasing drug resistance. It affects children. COVID doesn't do it that much, but 1 million children dies every year from tuberculosis, or it's 0.5 that die and 1 that are affected, rather. And it's still the most deadly infection in the world. It's called tuberculosis, and we have a lot of it in the Western Cape. And we have 30,000 COVID cases in the Western Cape, but every year we have 56,000 TB cases. So the COVID epidemic, as it is now, is still only half the cases of TB that you would be expecting. And just to show you a historical perspective, I mean, in 1851, it's been shown that 1 in 4 people alive was actually killed by TB at that time. And since then, we've made improvements on the social scale, and better food and better drugs and vaccinations, so it's no longer that much of a threat. But at some point, 1 out of 4 was killed by tuberculosis. So this is what task my organization does. It's a bit of a funny map. I mean, that gray stuff at the back should actually be blue, because that's the sea. You see, we are mostly in Cape Town, in the northeastern areas. We do have, because we work with tuberculosis patients, we are stationed where the patients are, so we don't have to bus them around the city in an infectious state where they are. This map also contains some places that are called the DTTC, that's the Desmond Tutu Center at Stellenbosch University. They are looking after children with tuberculosis, and we have a few common projects. So this map was used to apply for funding for both adult and children TB research. But you see that's how we sort of work. I now currently sit in Paro, in the middle of it, in our building that we call HQ, headquarters, where we have a state-of-the-art biosafety laboratory of the kind that you would now need more of in a crisis like COVID. So TASK is a world leader in proof of concept studies of new tuberculosis drugs. Probably nobody knows this in Cape Town, but every new tuberculosis drug is probably tested here first before it goes into any other humans. I have 150 staff to look after. Nowadays, I see it this way. Doctors, nurses, pharmacists, microbiologists, then people that train everybody. We have recruiters, drivers, cleaners, secretaries, admin people, just like everybody else. So it's a medium-sized business for us. And we're mostly funded by US grants and European Union grants. with some for-profit work from the pharmaceutical industry, if we can get it, which is quite nice to create some profits and invest in infrastructure. So COVID-19, it hit us just like everybody else 2 months ago with a bit of a surprise, because all our research was actually stopped. We were considered by the minister as non-essential, and we were asked to stay out of the clinics because they now had to prepare for this COVID-19 epidemic. And so we had to stop, and that was not very nice for us, just like any other business being out of work, because, we mostly pay by, work that we do, patient visits, patients that we put on these new regimens and observe and report how it's going. And so I then had a short brainstorming session with a few people, and we initiated then this vaccine study, the BCG vaccine study that Prof. Peters reported about, I think, last week or the week before. And he joined us on that. And then to just keep myself busy and my staff informed, I started writing little letters. So I called them the Corona updates. And we sent them out every day or every second day during that epidemic to keep our staff informed. And for this talk, I've just gone through the 40 versions that I've already written and picked out a few bits of interesting information that I thought might actually be interesting for the crowd listening here. And so these are my personal views, right? Some of it might not be shared by others. I'm just going to go into this. This is one of the first slides I shared, which is how actually this COVID virus transports itself when you cough it out. So interestingly, it doesn't reach much further than 2 meters. From on the left with a droplet, when a person coughs or sneezes, that's basically why we do social distancing. Because if you are more than 2 meters away from a person with your nose, right, you don't have to sniff there on the ground, but if you're 2 meters away, in a sitting position, you won't be reached by one of these droplets. This goes for SARS, and it probably also goes for tuberculosis, but it wouldn't go for measles, chickenpox, where the particles can actually float and they're carried with the wind, and you can inhale them even outside a door. Chickenpox is incredibly infectious. It will creep through every little nook and cranny to get out and infect other people, whereas SARS, this COVID-2 virus, it makes social distancing successful the way it's distributed. And this really works. Just stay away from others and you'll be fine. Another thing that I published a few days later. So this is an app I have on my cell phone. It's called Flight Tracker or Flight Radar or something. So just look at this. How Africa has done very well in just stopping travel. There is, on the right slide, there's just no planes, right? This is at night at 8 o'clock. Whereas in Europe, this axis from Asia to Europe, there is still quite a bit of planes, and the yellow ones are all planes that are airborne, okay? They're not the ones that are on ground. And then you can look on the left, the person that accused the WHO of having caused COVID, what the slow reaction in America means. This is sort of what you need to do to spray the virus. You just keep all the planes up and you let them fly left, right, and center wherever they want. And if you look at the numbers of affected people and death now, it sort of mirrors this picture, where good travel restrictions were imposed, you have much less problems. So these are some numbers, I updated those. So cases per population. So this isn't a graph that is now influenced by how big your country is. Our graph is at the bottom. So if we feel that we are badly affected, we haven't even seen a fraction of what Italy, Switzerland, Germany, and the United States, where the cases are still rising, have seen. We're still really a tenth of what the problem could be, even in educated or very well-run countries. The other thing that's interesting on this graph is that our epidemic is really late. You can see that our strategy of delaying it really worked. And another thing that's a bit worrying is that it's still rising, and it seems to be accelerating upwards rather than flattening out like it has in Italy, Switzerland, or Germany, the countries that I picked to compare. And the other graph here is the death per population. And there, Italy is the worst affected. We're right at the bottom there, the red line, but still it's rising. Okay, and an interesting country that's where I originally come from, Switzerland. They're right at the bottom, so they've sort of managed to calm the situation almost completely. They've reopened the economy and they have very few deaths now to report nowadays. And they have actually now been able to measure the impact of this COVID-19 in their death statistics. And so if you look at this, and this requires a bit of explaining. So this is the death rate, so people that die, mortality over the years. So on the left is 2015, on the right is now. And the gray bands are the expected kind of variation of death rates over time. And at the bottom, that small gray band, this is people that are younger than 65, and at the top, it's people that are older than 65. And obviously, the older people die more frequently, and you can easily see that in winter times, and that's when they have flu, right, over there. So that would be in December, January, when we are on holiday, they have flu season. You see that there is things, these red peaks. And it's German here, but it says starke Grippewelle. This means that's a strong flu wave. And this every time this kills an excess number of old people. So it happens almost every year. It didn't happen in 2016. But now if you look here on the right, this is the COVID-19 peak, which is quite similar, I think, to a strong flu wave. Interestingly, there was no additional flu wave that would be expected earlier, probably because of lockdown and less transmission of the flu. But for them that have now reduced the rate of death to almost zero, they now think that they did very well, that they could limit the impact of this epidemic to mainly old people that died. So the young population was barely affected, and that it did not surpass the dimensions you would expect from a flu wave. That is in Switzerland, where obviously people can do social distancing, they have more space, they're generally very healthy, and it's mostly middle class people. So how this will pan out in South Africa is a matter of speculation. It's really difficult to tell, but just comparing to Switzerland, I mean, this is the children are going back to school. They even have now Corona backpacks when they go to school, but they are also worried about the new normal, right? So the true normal. So you can see the little Swiss guy that's sniffing his little flower there, thinking that he had a nice little break, and there's this big wave of so-called new normality that's going to hit him soon if he doesn't really jump to the wayside very quickly. Right, so this is something South Africa has obviously had to adjust to. Most of the recommendations that came from places where the epidemic was already happening, and had to somehow, translate these recommendations and experiences as they came into the South African context. And this is very difficult, I think. I'm glad I don't have to make these decisions myself, but something that I found was interesting and is happening everywhere in the world is this sort of hysteria about the COVID-19. If you look on the left, the mentions in the media, right? There's COVID-19 dominates everything. So the TV, I'm not sure if you can see my pointer, but the news about TB is here in that little blue square on the right at the top. But if you look at what kills people, then TB is still number one. TB has killed more people since COVID pain than COVID itself. So, and hepatitis, pneumonia, HIV, malaria, shigellosis, all these diseases, they don't stop because of COVID-19. And it's been very dangerous, I thought, to just say, we concentrate everything on COVID-19 and all the routine things must stop, because this is now taking over. And we have then been monitoring this a bit. And this is the task recruitment statistics. So we look at almost everyone in the Northeast there that is diagnosed with TB in the state system. This is a notifiable disease, and we somehow have access to this data. And this is what our recruitment team comes up with, and it's here on the left. It starts, I think that would be 2019. And you see that break, December, where almost nothing happens. We are on holiday and the patients are on the Eastern Cape. And then you can see the year started actually okay. The blue bars are the results that we receive, and the red bars are the people that we eventually see and potentially include in our studies. And then suddenly there is a drop, like in March, April. Now, interestingly, people did no longer go to the clinics to be diagnosed, right? That's why the blue bars are low. So there was this hysteria out there, and people with TB no longer wanted to go to the clinics because they thought they would pick up COVID-19 there. And that is still the case. You see, if you look at the average over the last year and a half, there is still to this day, there is half or less of the TB diagnosis made. But we know that these people are out there, and those not diagnosed TB people are currently infecting others because they are just not going to the clinics for whatever reason. And recently we've been able to put people on studies again, fortunately, but this really is a problem, how the COVID hysteria keeps people with a treatable, different epidemic from having it treated. And thus this COVID focus will cause other epidemics to run out of control. So this was also picked up at the NICD, our central infectious diseases unit in Johannesburg, and the same trend of TB testing is observed there. It's just about less than half of TB tests are actually conducted since the lockdown started, and there's a lot of people with undiagnosed tuberculosis that is coughing out infectious droplets running around out there right now. And the WHO has picked this up and has made some calculations. You know what this now, the health cost or the TB cost of the COVID-19 lockdown. So they're looking at the red line. You see that the blue line would be what one would expect. So recently in the last years, every year we had a 2 to 3% reduction in tuberculosis cases, and this was mainly due to good investment, more diagnostics, more awareness, people coming to the clinics, people taking the treatment. So it has been improving slowly over time. And now there are these scenarios how the incidence on the left will soar, the orange and the red line, depending on how long the lockdowns are, and how the mortality, so the people dying from TB, because they are diagnosed late and treated late, how that will actually increase. And these are the same kind of modeling exercises that people use to model the COVID disease. And so so that's the cost of a health cost of a health intervention, so to speak. So there will be a lasting impact in high burden settings, the delay of TB diagnosis and no effective TB treatment. So for a 3-month lockdown and 10 months restoration that they assume for that model, there will be an additional 6.3 million cases in the next 5 years, and an additional 1.4 million TB deaths until 2015, which is more death than COVID-19 has caused, a lot more. And so this will obliterate all the improvements seen over the last 3 years in TB treatment. And the incidence and death will go back to the levels between 2013 and 16 because of the lockdown in all these high burden countries such as South Africa, India, and other places. So the minister has now also looked at this and has actually, upon being petitioned by a few TB and HIV researchers, agreed that even if we go back to lockdown level 5, that the TB researchers and the HIV researchers should be allowed access to the clinics and should be able to continue their work. So I hope we're not going to have to go down to these lockdown levels, but if we do, then we will be able to continue our health activities and in that context also our business. Okay, so that was all I had to say. I thought this cost, in health terms or health currency might be an interesting topic for you to listen to. It's not something you can invest in or you can trade with, but it's still an interesting thought, because it's like how one health intervention, makes another one harder to implement. And the complexity of it all is really quite amazing. So, in the past, I I always made this joke at the end of my trials that on the left I was in Switzerland, where I did a lot of my training, and you can see on the right it's Brooklyn Test Hospital in Cape Town, and you can see the similarities, right? There is a mountain at the back, there is clouds, there's a fence, and there are little houses, and I just thought how nice it is now to do the same thing and how similar it all is. But right now I'm personally not quite sure if the Swiss model is going to be completely adaptable to our country, and if the outcomes are going to be the same. It's I think a very interesting time, and I would not want to make a prognosis, but I just think that we are in for quite a long, rough ride. So thank you for listening. That's what I had, and I hope that someone else can take over the screen now.
Yeah, thank you very much, Professor. Can I just want your opinion on one or two things, and perhaps the starting point is, if I look at the graph that you showed of Switzerland, and if I look at the age group below 64 on that graph, and the fact that that age group is incredibly low, the death rate in that age group, does that not say something that the focus of the world on approaching the crisis could have been a bit sharper and could have been a bit more focused? What is your view on that?
I hope I'm unmuted. Yes, I see this picture on my screen. I'm not sure if you do.
Yes,
I am very happy that I could bring that across. You are right. So the people that basically run the economy, they were very, very spared, you can almost say. And if one looks at this graph, one could easily conclude that one should just protect the vulnerable and let everybody else go about their business, which is basically what the Swedes wanted to do. And the Swedes have made a few mistakes. As I've read a bit about the Swedish experience. What the Swedes didn't notice is that their old age homes, where their vulnerable people sit, they are mainly staffed with people from overseas that just work there for half a year, Russia, other places, and they can't actually afford social distancing. And it seems that the disease was carried into the old age homes by those people that the Swedish authorities didn't quite flag as a risk. And so they didn't do well at protecting their vulnerable the way they wanted. But I think this the Swedish way done right, that you isolate the vulnerable groups and protect those, whereas everybody else is continuing as normal, would be great. Now, that said, is that at the start of the epidemic, you never really know who your vulnerable people are, especially in this country where we have several million HIV positives. You don't really know if those, if they're stabilized on their antiretroviral drugs, are those at risk or are they not? Would you have to isolate them? Would you not? How much is being overweight a risk? How much is being asthmatic a risk? So it is very difficult to clearly define that. Though I think the main thinking of separating the population into vulnerable and less vulnerable groups and treat them differently, I think is a good idea.
And perhaps it'll assist the economy in a very big way. Just a follow-up question: if one were to look at the current state or what we are experiencing in the Western Cape relative to the rest of the country, is there any specific reason for that, or is it purely based on they had a head start and the rest of the country will most probably follow?
It's a very good question, and I can only speculate just like everybody else does. So there are, firstly, we had a head start, and then I think we are tasting a lot. So our numbers are perhaps a bit higher. And what I personally think is a problem that, if you look at how empty the place becomes over December, January, when everybody relocates to their homes in the Eastern Cape or elsewhere, then that did not happen before the lockdown. So I think people were caught in living quarters that aren't very comfortable. All these, you can almost call them seasonal workers. They probably live in very crowded circumstances, spending very little on their accommodations to save all the money to send it to their original places. So I think we locked them into conditions that weren't conducive to them doing social distancing, and that might have helped as well.
If one were to just quickly, if anybody has any questions, you are welcome to put them on the chat. I'm going to ask one more question, and then if there's any more questions or not, we will continue. But Professor, just a last question. There's, as far as I see it, there is two solutions in the end, or actually a third solution perhaps, either a vaccine or a kind of what this word that the Twitter specialists are throwing around, and the herd immunity that everybody seems to be trying to get to. And the third one is that basically the community decides that they've got a grip on this and we'll get on with life, and we'll treat people as and when they come. And we, unfortunately, it will be a situation that has casualties, for lack of a better word. Your view on how this is currently looking in terms of playing out, and in terms of how and where you find is the best chance of where the world might end from a medical point of view?
Yeah, I think right now in South Africa we can only just observe what's happening. We've done what we could do. We've done the lockdown. Right now I think the case numbers are rising, and we just have to hope that there isn't going to be a catastrophic, overwhelming of our healthcare infrastructure. There's one more thing that you didn't mention. We might actually have people out there that aren't affected by the virus at all through some kind of unknown factor. Only a proportion of people is actually susceptible to it, which is something that isn't biologically very plausible, but it's possible. It's a new virus and it might not be able to infect everyone. But I think this kind of thing, like the picture you're probably still looking at, once you have the epidemic behind you, you can analyze it and then you know what you should have done. It's very, very difficult to predict it. Right now, I think we must just, on a personal level, just keep your distance, and on a business level or professional level, adapt to whatever happens. That's my opinion, and I don't think you can make any reliable predictions of what will happen and bet on something, invest in something, except things. I think big events with large crowds, that will not happen for a very long time, and probably international air travel also will probably be hampered by a very long time. But otherwise, I think just being flexible and adjust and be inventive and just be entrepreneurial is what needs to be done.
Thank you, Professor. That was, I think, the answer there in terms of don't gamble on an outcome, because that is a forecast with just too many variables in. And thank you very much for the time. Thank you for what you are doing and that you shared with us. I think it's truly informative, and from my point of view, and I'm sure from the rest of the audience point of view, I think post-COVID, and I say post-COVID in the hope that there will be a specific post-COVID timeline, but post-COVID, I believe that there should be worldwide not only a bigger focus on medicine, but a bigger focus on the preventative side of medicine, and more money towards research in almost community-based medicine, as opposed to very limited use specialist, perhaps high margin medicine, but rather in community medicine that has a broader impact for much more people. So from my point of view, thank you for the time, all the best, and I hope that once this is all done, we can have a nice glass of red wine. Thank you very much, Professor.
Thank you for listening.
All right, now I am going to turn, as per the discussion, a bit more towards some economic numbers. And just to share it with everybody, I want to start off with a graph of the rand-dollar exchange rate. And why this is for me an important graph is simply, this is the rand-dollar exchange rate for the last just more than 20 years. That line is the exchange rate. Here we had the default, specifically Russia, South America in the early 2000s. That was the financial crisis, or as the Chinese like to refer to it, the American crisis. This was when Minister Nene, at that time Minister of Finance, was fired. And you can see how the rand exchange rate moved around this. This was, we started on a nice level of around 14 to the dollar. And as the year progressed, we had the downgrade by Moody's, and we had the impact of COVID on confidence worldwide. So this is the exchange rate. I want to highlight a few things. Number one, if you look at the blowout we had in early 2002, the rand went all the way to 12 rand to the dollar and came back to less than 6 rand to the dollar. The same with the financial crisis. It went to 10 and came back to 6.5. With the Nene firing, the rand went about 16 and came back to 12. So this is part of normal reactions over time. This blue line is the difference in inflation between South Africa and America. So it's commonly referred to as the purchase price parity. So that means the rand should at least weaken from a purchase power over this. And we just put 2 standard deviations in. The point is, the Reserve Bank's mandate is to manage this line as best as possible. Technically, this is inflation, and for this respect, it's the difference between our inflation and the US inflation. So that is a given. This weakness of the rand will happen. The point that one must be careful, over the last number of years, the rand traded at a discount if you were to look at this. Now remember, this blue line is not a target, it's not a fixed line. I can actually move that blue line if I want to. It's more or less trying to see what the average over this period of time is. But the concern is, be very careful in this respect. We've had a blowout. We were actually at 1930, 1950 on the morning of the 30th of January, because on the 27th of January, the lockdown started. We were downgraded that evening, and we were actually trading round about 19 levels, but we are strengthening. Today we're around about 17. So one must just realize that if our inflation rate is going to keep on strengthening, yes, a downgrade country will trade at a discount, but be very careful as to the size of the discount. Secondly, I want us to have a look at the 10-year government bond. Now that is the rate at which South Africa borrows money. And just to keep that in perspective, if you were to look at the February budget, which seems a lifetime away, but if you look at the February budget and you take the February budget and you look at the amount that was budgeted for interest on this debt that we carry, it roughly equates to about R1 billion every working day. That's what South Africa pays in interest that was budgeted, for something like 220 billion. Obviously, that'll be much more now. But this shows you that our 10-year bond rate, that's the rate at which government can borrow money. On the other side of the coin, the rate that the government needs to pay to give investors enough of a yield to stay in South Africa. Look again here. As March approached, we started to weaken. We had the massive fallout from COVID, we had the downgrade, and this bond rate went from round about 9% all the way to 12%. But then, and this is not unexpected, slowly things started to normalize again, and this bond yield over the last 3 months started to trade down, where we are now kind of in line with where we were the early part of, for most of last year, for the last 12 months. This was partly due to the fact that the Reserve Bank entered to create some liquidity. The Reserve Bank noted that there was a lack of liquidity in this side of the market, but it was also because we offer a real yield. Just to put that into context, the Swiss government, from 1 year to 50 years, any time in that period, if they borrow money, they actually pay negative interest rates. If you now buy a Swiss 50-year bond, 100, that will pay you in 50 years, 100 Swiss franc, you pay more than 200 Swiss franc for that, just to get 100 Swiss franc back. That's where yields in the world are. But this is an indication of our yield. And now I want to take you to the slide where I take the same yield graph that we had on the 10-year bond. That's exactly the same one. And this is the prime interest rate. Remember, we had the 2% drop here in March. We had another 2% drop in April. And we had the 50 basis point drop in May. But what is interesting here is you can see as the negative sentiment started, the Reserve Bank realized they had to do something and they had to come to the party. So we started to see these drops. What is interesting, if I take a longer term view, if I take the same 10-year bond, this is just now for a longer term view. This is the hike that we saw. Here you saw late in 2015 when we had the negativism when Nene was sacked. Nene, there was two things, bad things happened late that year that we paid for dearly. The one, Nene was sacked, and the other one is Heineke Meyer was sacked as Springbok coach. But look, that's all history now. We've recovered from both of them. But if you look there, you can see the negativity. This was just before the election of Cyril Ramaphosa as president. And as you see there in October, November, December, the market started to get uncomfortable that Nkosazana Dlamini Zuma might be elected as the new president of the ANC. Well, Cyril was elected. There we had Ramaphosa, rates coming down, government could borrow cheaper, confidence in South Africa, and that started to wane over time. All the way to where we started to get confidence back again, and then we had this jump. But what is interesting, bar for this brief moment here, you can see that the prime interest rates was always a fair percentage above our long-term interest rate. And I want to show this just to give you an idea of the anomaly that we are in now. This was the downgrade. There we came back, but we still, look at this ratio here. This is about confidence. So although this prime interest rate was always above here, it also shows you that the South African government and the Reserve Bank had to take drastic steps to try to get that done. Our prime interest rate is now the lowest it's been since, I think, 1966. This is where we are now. It's difficult to compare previously simply because prime wasn't the independent rate that was set by a monetary policy committee. It was set partly by the union buildings, but now we're in a different situation. And this is where I want to bring in my partner in Galileo Capital, Warren Ingram. Warren, in terms of this environment and in terms of where we are, what is your prognosis? You must have clients at the door continuously asking for advice. What is the core message that you give to clients currently?
I think it's a difficult time, Theo. So if I just want to reflect about what we discussed on this call, I think almost a month ago, just to give you a bit of context, I think we were looking at the rand that was way above 18 something to the dollar, and real blood on the streets in terms of the JSE. And at that time we were saying, just hang on and wait for the rand. It will come back. Our view was that 17 rand to the dollar is good. But you could start to trickle money out of rands into dollars at about 17.50. And having just looked a couple of minutes ago, I think we're at 16.87. So it tells you that that cycle that you're talking about is starting to rebound. So in terms of advice to clients, a few things. One, that I think it is important to get your local versus international allocation right. And so the fact that the rand is now back at our target range doesn't mean that you send every cent you've got in South Africa out, but it does mean that you should be use the opportunity to get the balance right. And for most people, that will range at somewhere between 25% of your investment assets should be invested overseas, up to 75%. And so if you're at your targeted range, then don't worry too much about what the rand's doing, because I think, if you try and trade this rand, if you try and use the weak rand as an opportunity, I think that's a real mistake. So I wouldn't be opportunistic, because it can bounce and hurt you badly. At the same time, I think I'd be very careful about trading the stock market also on these bounces. to give you an idea, I think it was today or yesterday was the 50th day since the drop in the US market, the peak drop point, or the bottom of the trough. And in 50 days, the US market is up 40%. And I don't think anything's better worldwide. I don't think there's a situation that we can look at, whether it be politics or economics, that's better. But the biggest market in the world is up 40%. So I think on international markets, if you are converting rands and you're sending it out, be careful to just flood your investments with lump sums. I would definitely be phasing it in. I think there's a lot more value and a lot more opportunity in Europe and in emerging markets than I think there is in the US. But what is interesting to note in the US market, and it's the first time I've seen it for quite some time, is that the value sector of the US market is starting to perform very well, and in fact in the last few days is starting to outperform the growth sector. And so possibly there is some sanity there around the overvalued tech sector starting to take a breather, and some of the bigger industrial type businesses that have been decimated starting to come back a bit. And I think a lot of this can be explained by free money or kind of quantitative easing overseas, and so where there is a major push from central banks to flood the market with money, and they're charging you basically nothing for it, then there is a time when investment markets will look for yield, and they'll look for growth, and so that partly answers why the rand will strengthen, but it also answers why there is money moving out of cash back into shares again. And I think that's happening on a broader sector. Even the European banks, as an example, have been a terrible place to invest money in the last decade, and for the first time in a long time, European banks are starting to outperform the US equivalent. So I think there's kind of a reawakening of the whole value cycle, which was decimated from 2009 right up until the start of this year. And so for me, that's very interesting. I think looking at the value sector is certainly important. And I think just coming back to South Africa, it's been nice to see the JSE, kind of showing some positive signs of recovery, both from through April and May, and at the start of June. That doesn't mean that we're in a long-term recovery, or that this is the beginning of a nice big bull market. But I do think that there is some momentum there. And what's interesting about momentum is that it starts to feed on itself. I'm having conversations with people across the age spectrum, so from sort of late 20s, young professionals, through to older retirees who are re-looking at their property portfolios again. And in the past, re-looking meant they were looking to sell. Now they're looking at property as a buying decision, to say, if they look at the cost of ownership now relative to cost of rent, as an example, that the massive drop in interest rates has made cost of ownership better. So I wouldn't be surprised to start seeing at least activity in the properties, that there is great appetite for risk assets again. And so I think we're going to see a flow back both into property and then again into the stock market in general. So both physical property, listed property, and then the general JSE. And what's interesting is it's not just Naspers and Prosus holding the JSE up. It's a different range of companies that are delivering. And I think we can look to things like the oil price as a really nice indicator of what the future looks like for the JSE. If the oil price continues to rise, there's quite a strong correlation between the rising oil price, rising emerging markets, both from a stock market point of view and a currency market point of view. And so if the folks at OPEC Plus, keep doing what they're doing in terms of constraining supply, and it does force the price up, that is very good for the JSE. So I think overall, I think there is some appetite for risk assets again, and I certainly wouldn't be shying away from risk assets. I think cash, which has been a great place in South Africa for the last 5.5 or so years, pretty much beating everything else. I think that's now become a really lousy asset class to hold. I expect that we're probably in the region of 4 to 5% for money market funds by the end of this year. And if you take inflation, even if inflation is only 3 or 4%, you're barely getting a return, and that's before tax. So I think that's bad for retired people who've been sitting on a lot of cash, but I think it does create very positive pressure for the buying of risk assets again, those that have the chance to beat inflation. So I must say I'm a lot more comfortable as an equity investor in South Africa than I've been for a long time, and I think certainly there's a lot more sanity that's prevailing again. We are going to talk again in the weeks ahead about what happens in the US when companies start to report their earnings for the second quarter, which will be the first time that they're reporting a full quarter's earnings with COVID and the impact of COVID on their lives. But I do think there are some signs of life all around, which is interesting. We shouldn't be seeing that in the middle of a crisis like this, but it tells me that potentially either investors are continuing to be irrational, or that markets are starting to price back some form of recovery. The one concern is that if you look at the US market, it's priced for perfection in 2021. So the US market has to deliver absolutely brilliant performance for 2021. There can be no negative surprises at the current valuation of the US market. And that always does worry me because nothing ever unfolds for perfection. So that is a warning note, but I think certainly I would be sending money out globally, and I'd be underweight America, overweight emerging markets, and probably on weight for Europe. I think it's the first time I'm talking about Europe as a place to be, but I think this crisis might have forced the Europeans to finally take the corrective action they needed to take to get the management of their whole balance sheet as a kind of a collective on the right path.
Warren, just a question. If you have money available right now, a lump sum right now, and it's long-term money, let's say it's 5 or 10 year money, and it's almost part of your long-term plan, how would you approach it, and what would be your steps, and how would you channel that?
I think I'd probably aim for a 50-50 split between the SA market and international markets. The SA market, I wouldn't be very clever. I wouldn't try and make big sector views. I think just doing the generic index is not a bad call in South Africa. Internationally, I would probably put 2/3 of my international money or 70% of my international money on the world index, and I would overweight the emerging markets with a balance. So 30% of my international money in the emerging markets. Important to note that emerging market index has very small exposure to South Africa, so you're not really doubling up your SA exposure there.
Would you do that over a period of time, or how would you approach that putting the money into the market?
Yeah, I think I'd be careful, just worrying about transaction costs because the amount that you're giving me there, but on a principle, I would definitely be phasing it in over about a three-month period on the JSE. And potentially a bit longer on the world index, but 3 months on the emerging markets.
Thank you very much. Thank you, Warren. Thanks for your insight. I think it's really helpful, and we hope to talk to you again in about 4 weeks' time, just to see how it goes and where your views are. I think it was a Eugene. I think it was a great session.
Yes, thank you, Theo. Then, to conclude, a big thank you firstly to Professor Diacon for a very informative talk on COVID-19 and the effects and the unintended consequences, may I say, that the focus on COVID-19 has on the diagnosis of other diseases, and particularly TB, which could in itself have serious health and economic consequences going forward. He certainly gave us a lot of food for thought. And then also I want to thank both Theo and Warren for again taking the time to share their knowledge and expertise with us regarding politics and economics in the context of COVID-19 and the anticipated new true normal. And then lastly, thank you to everyone attending, and we look forward to seeing you again for next week's session. Same time, same place. All the best. Keep safe.